Hello, welcome to DC Finance, Credit, and Tech.
Child tax credits worth up to $3,600 per child are set to be extended for another year in a White House proposal. It comes as there's still a lot of debate in Washington about President Biden's trillion-dollar budget. The good news is lawmakers want to extend the tax credit through 2022, meaning it'll continue to help some 39 million families. Under the proposal, families will continue to receive $300 a month per child under 6 and $250 per child aged 6 to 17. The credits will also be made refundable permanently, meaning those who don't owe any federal tax will get it as a refund. Previously, the credits were worth $2,000 a year per child, but they then increased as part of a COVID relief bill. Households earning up to $150,000 per year and single-parent families earning up to $112,500 currently get the credit. The proposal from the White House, which needs to be approved in Congress, comes after reports last month that Senate Democrats were aiming to extend the monthly child tax credits until 2024. The House Committee on Ways and Means, the Chief Tax Writing Committee of the House of Representatives, then revealed an extension until 2025. In other news, while the latest extension proposal is good news, it's not as big of a boost as previously planned. The Democrats' budget plan was originally set to be worth $3.5 trillion, but has now shrunk to around $1.75 million. When will I get the money? Eligible families started receiving the first half of the credit in July 2021. The payments are deposited monthly until December. Families will then get the second half of the credit when they file their 2021 taxes next year. Advance payments are sent automatically to eligible people. You do not need to take action if the IRS has your tax information. Who qualifies for advance payments? In order to qualify for advance payments, you and your spouse, if you filed a joint return, must have filed a 2019 and 2020 tax return and claimed the child tax credit on the return. If you're not required to file a tax return, you can claim the credits with an online tool. You must also have lived in a home in the U.S. for more than half the year or filed a joint return with a spouse who has a main home in the U.S. for more than half the year. Other criteria includes having a qualifying child who is under age 18 by the end of 2021 and who has a valid Social Security number. You also need to make less than certain income limits. We round up all the important dates when it comes to child tax credit to stop the direct deposited checks. The IRS says you must unenroll 3 days before the first Thursday of the month, which makes the next unenrollment deadline November 1st. Once you opt out of the payments, you cannot opt back in. The IRS says it will make that option available later. It's important to note, for couples who are married filing jointly, each parent must unenroll separately. If you miss the deadline, you'll continue to get the monthly advance payments. Thanks for watching. Leave comments below. Stay tuned for more news and updates. Don't forget to subscribe to our channel.